So we're going to go. I just want to tell you, by the way, it's called connecting the golden dots, right? If you live in the United States and you have children, I want you to ask yourself, what is their future? Think about that as we go through this, because that's what this is all about, right? And how gold intertwines in the way that I see things, right? So, problem is, and if there's any nobility in what I think President Trump is doing, it is, how do we bring back manufacturing? How do we do it? This is the biggest problem. And I'm going to go through how this is all played out and where I think it's all going. But you have to ask yourself, because we don't make anything anymore, and we're broke, and we're uneducated, and we're in trouble in a big way. And I'm not saying this to be dramatic. I mean it in my soul. I got 3 kids. My youngest is 21, and I wonder what kind of world she's growing up in. And I think someone got to President Trump in a good way and woke him up, and their administration. I'm going to try and show you that right now, okay? But the bottom line is that we don't make anything anymore. And instead of making things, we've financialized the United States. If you're not in financial services, you know, what do we do? What do we contribute to the world? And that's what this is all about. Let's start with the facts. We're 200 trillion in debt, you guys. 1 trillion seconds ago was 31,688 years ago. And we're 200 trillion in debt. Everyone says 38 trillion, but what about Medicare and Medicaid and Social Security and government military pensions? And how the hell do you pay off 200 trillion in debt when you don't make anything anymore? We've offshored our manufacturing for years. It's something called Triffin's dilemma. I'm going to talk about that in a second. I said we're uneducated. We're basically stupid. All right, it is. 60% of the United States has a literacy rate below that of the 6th grade. Now you tell me, is that an educated nation? Don't think so. And guess what? So we're broke, we're insolvent, we don't make anything anymore, uneducated. And Kristalina Georgieva, the head of the IMF, says, guess what's here just in time to kneecap everything else? That's called AI. It's going to take out 50, 60% of the incoming jobs. My son, who works for me now, was getting paid 80 grand a year to work at Price Waterhouse to analyze the real estate investment trust balance sheet. Now, what the hell does Price Waterhouse need to pay a kid 80 grand for when AI says, I'll do it for free? Boom, done. Think about that for a minute. Where are the jobs going to go? It's called a K-shaped economy, where the rich get richer and the poor get poorer, because the efficiency that comes at the highest level, the business owners who are way more efficient, comes at the expense of millions and millions and millions of jobs. Makes me think of Klaus Schwab wasn't such an idiot after all. You'll own nothing and be happy. Think about this. This is not bullshit. This is real, okay? This is real. AI says 50 to 60% of entry-level jobs are gone in the next few years. And we don't make anything, and we're dumb. Triffin's dilemma. I don't know if any of you know what Triffin's dilemma is, but it is the problem that we face right now. Triffin's dilemma says that if you are the reserve currency, you will always run trade imbalances. Why? Because the world needs more dollars than we can give them through trade alone, period. And so what happens is countries have to buy our dollar in order to buy things around the world, from credit to oil and everything. And over time, as they continue to buy our dollar by selling their currency, which means their currency gets weaker against ours, that inequity grows and grows and grows until manufacturing says, well, I can go to Cambodia, Vietnam, China, you name it, I'll go there and I'll sell my stuff at a lot less money. And we at the top will make a lot more money. And when you do this enough, what happens is these countries get flooded with our dollars, our trade imbalance, right? And instead of taking those dollars and doing nothing with them, they put them into US Treasuries. And that keeps interest rates low. So what has Triffin's dilemma done for us up until now? It's kept the world buying our stuff, which means, or taking our dollars to buy their stuff, which means the stuff we bought at Walmart and Target, we got really cheap. And it means the interest rates, because they continually buy treasuries, have been very low. So our asset prices, our house, our 401k go way up. We feel rich. It's an illusion. And the problem with this is that we have squandered through just idiotic fiscal and monetary policy. We're broke. And we've kind of screwed the pooch, if you will. And I think President Trump, or someone who got to him, understands this. I'm going to try and show you what I mean and connect the dots by this. All right, so all of you see what gold is doing. It's pretty crazy, right? And I want to tell you that every one of you in here is the pimple on the elephant's ass. Every one of you. The elephant out there, they don't know gold. They don't know gold if it fell on their foot, right? The people who have been buying this, and you represent such a small, can any of you talk to your friends for 8 seconds about why to own gold? No. Are any of you like me, where my wife says, if you open your mouth when we walk into Thanksgiving dinner, you're dead? Right? Well, that's me. So people don't get it yet. The official sector, that's the central banks. The central banks. I've been saying that for 5 years, right? If you've been listening to me. Well, now who is it? The most well-informed traders on the planet, and the wealthiest, are blowing up the COMEX exchange. We have become net importers of gold for the first time. We've been net exporters. Why is nobody asking who the hell's bringing in billions and billions and billions and billions and billions and billions of dollars of gold every single month for the last 16 months? Where is the mainstream? How about Jim Dumbass Cramer? Where is he? Why is he not asking this? Oh, gold's oversold, overbought. It's a top. That's what they all say, right? How about silver? Same thing. That's what they all say. But what happens? Well, let's see. Every month, billions and billions and billions and billions keep coming in. That's all you need to know. Period. Nothing else. I could get off the stage right now. The most well-informed traders in the United States have been blowing up the exchanges. Blowing them up with importing gold into the COMEX market. Who's standing for delivery? How about silver? The largest delivery in the history of the COMEX market for a December happened in December, right? After it was a overbought market, right? They raised margins to knock it down. Did that matter? No, it didn't matter. 68 million ounces were delivered. And so far this January, which isn't even a primary delivery month, over 40 million. Who's taken possession of 120 million ounces of silver in the last 40 days? And better yet, why does no one say anything about it but me? Ask yourself, a mint box of Silver Eagles is 500 ounces, weighs 42 pounds. Who just bought 120 million ounces, y'all? Do you think that has anything to do with the fact that the U.S. government just classified it a critical mineral? I don't know. Or how about the fact that they are now going to put state-sponsored price floors under it? I don't know. Or maybe now that they have just passed or floated a bill to create a strategic stockpile. I don't know. Well, that's silver. The same thing is happening with gold in spades, but nobody knows it. So if they listen to me, they might, but no one else seems to get it. All right, here comes the plan. Now, the plan has two sides to it. Just a show of hands, just to show how little this is really talked about. Who knows what the Genius Act is? Just a show of hands. All right. Well, the pimple on the elephant's ass. There you go. The elephant out there doesn't know at all about the Genius Act. But let me tell you what the Genius Act is. This is the first side of the plan. But before we get to the Genius Act, let's just agree to agree that we have seen more gold entering this country for the past 16 months, the United States, that is, than at any time in the last 50 years. Month over month over month over month. And I said 16 months ago, this is not tariffs, like we're being told. This is not arbitrage, like we've been told. You see, the way that the players would do it, players in the United States, a couple here in Canada, and Europe, they would suppress the price of gold for two reasons. One for gold and silver. Gold for one reason, silver for another. I've said a million times right here, that silver was suppressed because of the military-industrial complex, because you need huge amounts of silver to make high-tech weapons. And that, to me, is not even debatable. But we're going to set that aside for a minute. Let's talk gold. Gibson's paradox, the inverse relationship between real interest rates and gold. If the West suppresses interest rates to maintain a very strong and robust bond market and currencies that inspire confidence, well, you got to step on the price of gold, because that's the canary in the mine shaft. And the way they would do it is they would short the paper price in New York, which drives down the price on COMEX, and then buy a corresponding long position in London to offset their books, they being the banks, but that doesn't affect the price. And they would go back and forth between sending metal or what's called warrants, a piece of paper saying, I own it, you own it, you own it, I own it, back and forth in concert with each other for years and years and years to cap the price. But these exchanges, they all allow for one, kind of like Star Wars, you know, the very first Star Wars, there was the Death Star in that little hole they had to shoot a missile in. That's what this is. Oh, you can stand for delivery? Oh, because less than 1% ever did stand for delivery. But you can stand for delivery. And these countries in the global south starting the ball rolling, and then the central bank said, no more paper promises, we'll stand for delivery, thank you. And it's accelerating. Delivery. And the paper game, Bernie Madoff had a great thing going until everyone asked for their money back. And then what? And that's where we are right now. So I've been screaming that when the U.S. banks told the European banks, listen, he's putting tariffs on, guys, we got to send it back. I think they were putting the kibosh on the European banks and instead saving their own skin. Send the metal back, we got to cover. Don't worry, it's only one-way tariffs, it'll flow back. I said, no, it's not. They're reshoring. So first of all this gold is here in the U.S. Month over month over month over month over month, billions and billions and billions and billions. You need to know nothing else. It's here. Okay, set that aside. First part of the plan, the Genius Act, diabolically so at that. The law says that anytime you move money from January 1st next year, anytime you move money, it will be, you'll never write out a check again, you'll never send a wire again if you're in the United States. It will be moved via stablecoin, like instant settlement, like Venmo and Zelle, instant. And when I send a stablecoin to Adam over there, or when I send him $1,000, I owe him $1,000, a stablecoin is created, he receives it, the stablecoin is burned, gone. Backing that stablecoin, the stablecoin is the vehicle that drives on the blockchain rails. Backing that stablecoin will be short-term U.S. Treasuries up to 90 days in duration. That's creating synthetic demand for the front end of the U.S. Treasury. Stomp on the short-term interest rates, create synthetic demand for the short-term Treasury, but what else does it do? It has interest. Those Treasuries have interest. They just passed something called the Clarity Act that says, Adam or me, well, we can't own that, we can't keep that interest. It's not transferable to the holder of the stablecoin. Who keeps it? Well, the people who keep it are the issuers of said stablecoins, like the banks or like USA Tether, who I believe will be the primary benefactor of this. USA Tether, who is their CEO? He's a man named Bo Hines. Bo Hines was Trump's crypto czar until August. You think there's a little wink, wink, nod, nod there? Here's where the wink, wink, nod, nod goes. Tether has already purchased $14 billion worth of gold. 14. The largest stockpile in the world next to central banks. What does rising gold do? Well, it makes people who own it wealthy, but it devalues the dollar, period. Rising gold devalues the dollar. Triffin's dilemma says that everyone has to sell their currency to buy ours, so if we measure the value of our dollar against the dollar index, largely the euro and the yen, which have constantly been trying to devalue against ours, is that a good measuring stick? You're measuring it against a melting ice cube. It's not the way it's supposed to go. Measure it against gold like Roosevelt did in 33 when he confiscated gold at 20 bucks an ounce. He paid everyone $20.67. That was a lot of money when a dozen eggs were a nickel, 67 cents. Bang, he devalues the dollar by 40% thereafter, making gold 35 bucks. When you devalue the dollar, you do it in rising gold. What is Tether doing? It's what they're all going to do. They're going to take that treasury, the interest that can't be passed on, which suppresses interest rates on the front end of the curve, and they'll take that interest and they'll buy gold. Gold goes higher, 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 higher. You don't have to revalue it. James Rickard says 24,000. Mike Maloney says 10,000. How about Van Eck funds? Van Eck funds, that's not one of us. Van Eck fund says if the dollar loses its reserve status, gold will go to 180,000. They just came out and said this. All right, let's keep this all in mind. Gold keeps going higher, 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 higher. And the wink, wink, nod, nod was, all right, you're all going to give the gold to the U.S. Treasury. We're all going to buy it. You'll all become wealthy. But we're going to take that gold, and the gold's going to go higher, 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 higher. The dollar goes lower, 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 lower. How do you sell manufacturing to the world? Triffin's dilemma says you can't do it with the strong dollar. What if you soft default on the reserve status? They will soft default on the reserve status. Let me say that again. You save in dollars, you're going to go broke, period. This is by design. My mentor, Richard Russell, used to say to me, they have two choices, inflate or die. Here's number 3, soft default on the dollar. Soft default, don't tell anyone. Let the price of gold go to the moon. What does that do? Devalues the dollar. Now, why do I think it's going to go to the Treasury? All right, so let's just recap so far. All the gold's been reshored. You now have a vehicle to create synthetic demand for the Treasury instead of organic demand up to 90 days. Keeps the front end of the curve low to stimulate borrowing and all sorts of other nonsense. And the interest behind those Treasuries, anytime money moves, whether you buy a pack of cigarettes or a new villa, it's tied to it, to short-term Treasuries. That interest rate stays with the issuer. What is the issuer doing? Buying gold. Gold goes up, dollar goes down. You can sell your manufacturing, but how do you get manufacturing back to the United States? That's plan B. How do you get it back? All right, Judy Shelton. Anyone know who Judy Shelton is? Great. Judy came onto my show twice, once with me and once with my co-host, Michelle McCory, who's not here, and we're very happy to have Michelle. And she was Trump's nominee to run the Fed in 2016. One of, if not the most brilliant human beings I've ever had the pleasure of talking to. She said to me, Andy, and by the way, she said this in her best-selling book, Good as Gold. She says it all over her Twitter or X page. Andy, in no uncertain terms, President Trump told me when I was part of the transition team that on July 4th, 2026, this coming July 4th, it is the biggest day of his presidency. It is the 250th anniversary of the United States. He is going to peg the back end of the gold market to gold. Think about that for a minute. The front end of the curve is driven lower through synthetic demand where the interest is kept and put into gold, which goes higher. Bo Hines is the CEO of USA Tether, the primary benefactor of this, but JP Morgan and all these other banks and Visa and MasterCard, they will all do what they are requested to do because they will all benefit massively from this deal. The gold then gets sold to the Treasury. Now, if Judy is right, and she says, look, they're going to issue even a 50-year Treasury with maybe 1% interest, but a 5, 10, 20, and 30% or 30-year bond, 5, 10, 20, and 30, zero interest, zero coupon, which means it's redeemable in gold at the end. So the more stupid you are with fiscal policy and irresponsible you are with monetary policy, guess what gold does? It goes higher and higher and higher. And the Genius Act says gold's going to go higher and higher and higher. So you sell a bond for 20 years out for $20 million worth of gold. Today at $5,000, that's 4,000 ounces. What is it at 180,000, like Van Eck says, in a few years, when it's become obvious that we are no longer... What are all these countries doing in the BRICS that I've been talking about for 6 years? They're trading their own currencies over Enbridge or SIPS, the Cross Interbank Payment System, and they're settling imbalances in gold. Now, I don't have enough time. I have 1.5 minutes left here, or I'll go deep into that to support this. But here's the bottom line. If you sell a bond that is redeemable for 30 million or 40 million or 50 million in gold, redeemable in gold, zero interest rates, zero. That means you bring back your manufacturing at zero interest rates. No upfront borrowing costs. You build it out. And if the Genius Act keeps pushing gold higher and higher and higher and devaluing the dollar lower and lower and lower, guess what? You now have manufacturing here, and you can sell it at a wickedly low price because the dollar just collapsed. That's what they've all been doing to us. And you give your children a future, because our children and our grandchildren are flat out screwed if we don't. Flat out. How do you bring back manufacturing? How do you sell it to the world? in a devalued dollar with no upfront borrowing costs, and you pay back that bond in a fraction of the gold, 1/300th if Van Eck Funds is right, 1/300th of the cost today in 20 years or 30 years or whatever the duration of the bond is. What I'm saying to you is that we literally have no choice but to do this. And I don't have more time, or I would sit and go deep into this, but I just want you to think of this flat out. 30 more seconds, and I'm sorry for whoever's next. 30 seconds. If we don't do this, it's game over. This gives us the ability to bring back manufacturing, sell our products at a wickedly devalued dollar, and use gold as the key to all of this. The higher the price of gold goes, the lower the value of the dollar goes. And that is why, bigger picture for you all, if you save in dollars, you're going to go broke, so help me God. And if you are not a contrarian, you're going to be a victim. I'm sorry, 20 minutes isn't enough time for me to do anything. I got to go.